Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Alright, today we're going to be looking at the CFDs on gold and we're going to be looking at the SLV as our proxy for the silver market. But before I begin, I just want to have a quick word about the assets I cover here on YouTube. So, I've been having a few emails complaining essentially that I'm not covering enough assets and things are getting a bit boring here on YouTube. I've also had requests in the chat on YouTube asking me to cover asset WXY, asset ABC. So I just want to make things completely clear. I do want to grow the YouTube channel, of course, but I have limited time and my time has to be spent servicing my patrons and their requests first. I am not being lazy only covering a few assets. I cover hundreds of assets. Okay, in the last live stream alone I covered probably 7 or 8 in a single stream. I've sometimes covered as many as a dozen in a week. These live streams often go on between 4 and 6 hours in length. And you are entitled as a patron, once you become a member, to request any asset you want in the live analysis channel, and I will find the time to include it and look at it. If you want a chart for a certain asset and I have one available, all you need to do is ask and I will post it and tag you in the Discord. This takes a lot of time and is very time consuming, as I've expressed before. I only have limited time available, especially during the school summer holidays with the kids at home at the moment. So I will cover more things on YouTube as and when I have the opportunity to do so, but if you want to see a certain asset covered and you want me to look at something, it could be anything. It could be a crypto, a commodity, an equity, it could be an index like the Nifty or whatever. If you want to see it, the best way of getting what you want is to sign up to the Patreon for just £10 a month and ask me for it. If you sign up at the start of the month, which is why I would recommend, you'll get to ask me 4 times during a month, and I will likely get around to covering those assets that you request. And rather than waiting for me to eventually and maybe get round to it on YouTube, which I guarantee you is no guarantee, you can get what you want in the time frame you desire. So in other words, you should not really waste your time requesting in the comment section me to look at this, that and the other if you want to see it on YouTube. And the same for those who are planning on emailing me asking me to look at A, B and C. I'm not going to do it here on YouTube unless my lifestyle changes and I suddenly acquire more free time. In the meantime, becoming a member and requesting via the Discord, via the Patreon, is the best way to get what you want. And I'm going to prioritise members' needs first. So there you go, guys. I just wanted to get that off my chest and be absolutely open and honest about the way things work. I'm not going to tell you. I will get round to it eventually because I'm not here on YouTube anyway, not unless my situation changes. So now let's get on. Now that we've discussed the benefits of joining the Green Star Patreon, let's get on now with the analysis for the day. So we're looking at gold. I'm working on a bearish alternative. At the moment all I have is my primary and a different version of it. I don't see any point in entertaining separate versions of a primary until the primary you're supporting gets invalidated. So we will just be looking at that today. And what I see here is a flat pattern. And then we're going to continue, and this is a 1 and a 2. So it's bullish. Right. I have it as a wave 4 within a larger cycle 1 within a super cycle 3. Now that's something I've discussed on the longer term in the past. So we're just going to focus on the short term price action at the moment. So let's zoom in and see what we've got here. Now we had a death cross of the 60 exponential moving average over the 250. This is synonymous with the market finding a low. It is not always the bottom, but it is 90% of the time a low. And this came just a few days after getting the death cross. This is normally a liquidity trap for those who come in and short off of this signal. It traps a lot of shorts at the low and gives liquidity to the upside. So from there we appear to have a wave 1 and a wave 2. It could be an A wave of an ABC zigzag down. That's also a possibility. Let's turn off our moving averages for a moment and let's come into the 30-minute time frame and have a look at what we've got so far off of the low. So we came back into price support, lows, 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 highs, 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 right? We've come back into this price support, into this little demand zone in the volume profile here, which is represented by this move up and then this pull back finding buyers. This is demand moving price higher and a higher pivot. We've come into this zone and we've bounced. Now if we just bring up our fib retracement for a moment, is we've got one locally here, we can see that we've come straight to the golden ratio, 61.8%, and we've bounced quite violently. If we bring up our regression channel here, we can see that we're stretching beyond the 2 standard deviations from a mean in our regression channel, so that's looking bullish as well. And now we would expect price to move higher, having bottomed here at the 61.8. There is also the potential that it has not bottomed yet. There's the potential that this initial move down was an A. We will retrace 38.2 to 78.6% of the wave A into a B, and then bring the wave C down for a zigzag like so. Okay, that's also a possibility. So we'll be looking for a reaction on the way back up. See if we get a reaction at the 50. If we just bring up our wave 4 for a moment, I use this because it gives us our wave 4 targets. Gone for the 23.6. This is not a wave 4, I'm talking about the retracement of a B wave being somewhere between the 38.2 and the 78.6. So what we can do here is put up another fib, and we can change this to our wave 2, and this gives us all of our retracements including 23.6, 38.2 up to 78.6. So we could, if we are in a B wave, basically find the B wave anywhere in this region here. Right? All this is already below. You understand? So it's either A, B into here, C lower, but not beyond this invalidation point at 1680.20. This is when this count is no longer valid. Or we've already bottomed here in the 2. So at this point, I would be recommending to our members that this was, or I will be speaking to you now, that this is potentially a golden corner. Okay, that we have a 61.8% retracement. We've had a bullish move up off of the low. So now you're looking to enter to the long side. We have a move up, we have a reaction, we set and establish our risk to our stop position, and then we move up higher. Now in this circumstance, if this has bottomed at 61.8%, this gives us an 80% probability now of making the median line. Okay, so more likely to be an impulse coming out of here, right, and heading up. We could get 1, 2, and then off in the 3. Confirmation above this level at this wave degree, minute wave degree, and once again we'll get confirmation at a smaller wave degree. This could be 1, 2, 3, 4, 5, 1, A, B, C, flat or zigzag 2. Confirmation above this level. Alright, so setups to the long side to be had from this point. And you'll know that I would recommend using the standard trade setup to do that, what I call the STS. So looking positive for gold, looking like the lows in. If price collapses from here and takes out the 1680 position, this is incorrect. Gold has not bottomed yet. That's really all there is to it at the moment. Now let me just have a quick sip of my coffee. Okay, and let's come over and have a look at silver. Unsurprisingly, it's the same circumstance. We've been correcting since August 2020, and we have bottomed around July, in middle of July. We've had 5 waves off of the low and potentially 3 waves back, or it could be the first wave of 3 waves back again, the same as in gold. So let's just I'll tell you what, we'll save that classical analysis till the end. Let's come in to a small time frame and take a look at silver off of the low then. So we've got our 5 waves, 1, 2, 3, 4, 5 into the high, and let's just take our channel here, and we can see how, let's just switch it off of log, make sure we're not on log. I think there's argument to suggest that that was a flat in the 1. So we've done the opposite of what we've done in gold. We've gone flat, sideways, zigzag, whereas we did zigzag, flat in gold, but it channels nicely. 1, 2, 3, 4, 5 finishing at the median line of the channel, and then falling out of it and collapsing down in a wave 2. We could use a pitchfork in the same way, like that, and see that we finish the 5, we throw over in the 3, we finish the 5 within the pitchfork, corrected price action takes us out of it. So from there we've retraced more than the 61.8 but not quite the 78.6% retracement level. We've got our invalidation point down here at let's just get rid of this yellow line, it's confusing me. Oh, that's the longer term retracement. So from here we've got 16.74 as our invalidation of this count. So 1 into 2, this could be not quite a golden corner, a little deeper, but this could be bullish again with an 80% probability of making a median line. Now let's just make sure we've got our original pitchfork selected. We have. So looking for 5 waves up on a smaller time frame into a smaller wave degree 1, pull back in a 2, there's your entry, standard trade setup, off we go. Confirmation above that level, confirmation above this level at minute degree. Looking very bullish. Nice strong volume here coming off of the low in this wave 3. And now let's just, I think that's all there really is to discuss on the Elliott wave front at the moment. Let's just, apart from the fact that if we come back out to the daytime frame, you may have noticed that the silver count is one whole wave behind, of the same wave degree, but one whole wave behind gold. I've had a few people question this, say how is that possible? Well, whether or not it's possible is a fact, right? If we are looking at it from a bullish interpretation, I can't prove that it's a fact, so maybe I shouldn't use that language. What I'm saying is it's a fact that gold made a new all-time high with its move up into August of 20. Silver very, very, very much did not. And it's a long way off its prior highs. So what we're seeing here is silver being left on the launch pad. It's yet to have its way free. Now, this is perfectly normal from a historical perspective. Gold tends to attract investment first, and when gold becomes too expensive to buy, the cheaper equivalent, which is silver, draws the attention and it rushes to catch up. So it's simply a delayed process. So seeing it a wave behind gold, for me, fits perfectly well. Now let's come into gold for a moment and do some classical analysis for a minute. Let's just gather up all this extra detail here, folder this for a moment so we can hide it easily. And let's just turn off all of our tools that we've got going on here, our counts and so on and so forth, and just have a quick look at gold. So now I've got the CC on the DXY open today. It's kind of pointless really, looking at this more for short-term fluctuations when we come down to smaller time frames. Essentially a negative correlation with the dollar, unsurprisingly, and the dollar's been ripping lately. We saw the euro actually fall below the value of the dollar this week. You know, so a sign of things to come over the long term. I think the dollar will be due a pullback, and a very, very big one. I've no doubt of that. However, over the longer term, I am a dollar bull, and I think that the dollar simply becomes more attractive in our current monetary system the more time that goes by. So we can see repent, or we can see, well, that's not the right word, we can see the dollar slack off, and dollar denominated assets, which are sensitive in that way, priced higher in those retracements. However, that does not stop these traditionally negatively correlated assets from marching higher while the dollar does. I would like to point out quite clearly that since the November 2015 lows and since the GFC, okay, we can see gold went on to make new highs. During this whole period, the dollar was going up in value, right? So they can and do go up together, right? They are more sensitively negatively correlated over shorter time periods. The same is very much true of Bitcoin. I've no doubt you've noticed. Both have marched higher since 2009. There's no denying that for Bitcoin or the dollar, but short-term volatility and negative correlation is much stronger over shorter time frames. So yes, there will be big peaks and there will be big troughs, but we are going to march higher together. A lot of people seem to be unable to accept that, even though it's right in front of their eyes. Gold has made new all-time highs while the dollar has strengthened. Bitcoin has made new all-time highs while the dollar has strengthened on the long time frame I'm talking. So we have to keep that in mind. So I digress. Let's get back to the point. So gold has gone from overbought to oversold, overbought to oversold twice here, and we've done it on the weekly time frame as well. This is quite frequently synonymous with a market low. We have a completed structure, although not perfect, with the C fading to extend beyond the A ever so slightly, but we have gone from overbought to oversold at maximum negative correlation with the dollar. Right. And now we have a sign that we've reversed into a 1 and a 2. So I see the possibility now of making new highs. The route to new highs being the route of least resistance here for gold. We still have things ahead of us. We must get back above the 60 exponential weekly moving average, but we came roughly to the 250. We still have work to do in these early stages, having come back to the 60 exponential moving average and longer term point of control here on the daily time frame. But this is how it always looks when we go 1 and 2. It always looks weak. 3 changes that picture by getting us above all of this. So that's what I'm expecting to unfold now. Like I said, if it rolls over and takes out that low, we'll have to come back and consider a bearish scenario. But for the moment, it's looking bullish. I feel much the same way on silver here. If we come out to the weekly time frame, we can see we achieved oversold conditions. Excuse me. Oversold conditions on the weekly time frame. Maximum negative correlation with the dollar. Very strong on balance volume positive divergence over the longer term. And then we can see here, if we look at the longer term Fibonacci retracement for silver, we came straight into the golden zone again, 61.8 to 65. So we come straight up, straight back to the golden zone, and now we're moving higher. All we need to see now is some volume come in to support this, break this downward trend, and this will start to look more and more positive as time goes by. So there you go, that's it for gold and silver today, guys. I hope you've enjoyed the analysis for today. If you're new to the channel and you like what you're seeing, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave us a comment in the comment section below. And as always, a huge thank you to my Patreon subscribers. Your support is greatly appreciated. If you're interested in joining the Patreon, there's a link in the description box below. Head over, have a read of the tiers, and feel free to sign up. I would advise that you do so only at the start of the month. And if you're not following me on Twitter yet, there's a link to my Twitter feed in the description box below as well. Alright guys, take care of yourselves, and I'll be back with you as soon as I can. All the best. Bye bye.